In this analysis, we're digging into Sungrow's latest performance report. And let me be clear, this is about much more than just a good quarter. What we're witnessing is a fundamental, structural transformation of the entire business. We're going to break down how Sungrow is reshaping its core identity and what that means for its position in the global energy race.
So what's the core thesis here? It's simple. This isn't just about impressive growth. It's evidence of a deliberate, strategic pivot. Sungrow is transforming from its legacy as a solar inverter leader into a genuine powerhouse in global energy storage, and that shift is fundamentally redefining its entire profitability and cash flow profile.
To understand this, we'll focus on 4 key dimensions. We'll look at the structural revenue shift driven by energy storage, the dramatic turnaround in cash flow quality, how it's solidifying its leadership in dual markets, and its strategic push into new high-growth sectors.
All right, let's begin with that structural transformation. To really grasp what's happening, you have to understand the 2 core technologies at play here. The difference between Sungrow's old business and its new one is absolutely central to the story.
For a long time, Sungrow's name was synonymous with the PV inverter. Think of it as the brain of any solar power system. Its one job is to take the direct current, or DC power, from the solar panels and convert it into the alternating current, the AC power, that the grid and our appliances can actually use. It's the essential middleman. But now, the company's new center of gravity is the Battery Energy Storage System, or BESS. The best analogy is a massive, highly intelligent power bank, but for the entire electrical grid. It's designed to do one thing: store energy when it's cheap and plentiful, say from solar at high noon, and then release it back to the grid when it's needed most. This function is becoming critical for grid stability.
Okay, so we've established the what. Now let's get into the how, and that means deconstructing the financials. The data from the first half of 2025 provides the hard evidence behind this transformation thesis.
And for me, this is perhaps the single most important chart. Look at the turnaround in operating cash flow. In the first half of 2024, the company had a negative cash flow of 2.6 billion yuan. Just 1 year later, a positive 3.4 billion yuan. This isn't just an improvement, it's a complete reversal. It signals a fundamental improvement in the quality of the business itself, from burning cash to strongly generating it. So you have to ask, what's driving that cash flow turnaround? Well, it's this: a fundamental realignment of the company's revenue streams. For the first time, energy storage has become the single largest business segment, contributing nearly 41% of revenue. It has officially overtaken the legacy PV inverter business. This is what that structural shift looks like on paper.
And it's not just about the size of the revenue, it's about the quality. The energy storage segment operates with a gross margin of nearly 40%. That's a full 4 points higher than the already healthy inverter business. So, as this higher margin segment becomes a larger piece of the overall pie, it naturally lifts the profitability profile of the entire company. It's a powerful dynamic.
And the momentum appears to be building. If we isolate the second quarter, the performance actually accelerated. Revenue grew by over 33% year-on-year, while net profit climbed even faster, at over 36%. This suggests the positive trends we're seeing aren't slowing down, they're picking up steam. So we've examined the top-line financials. Now let's drill down a layer deeper and pinpoint the precise sources of this new strength. The primary driver, without a doubt, is the energy storage division, and the numbers here are staggering. Year-over-year revenue growth in the first half was nearly 128%. A rate of growth like that doesn't just add to a company, it fundamentally redefines it. But here's a crucial point. This isn't a story of one business rising as another falls. The traditional PV inverter business remains incredibly strong. It's still growing at a very healthy 17% year-on-year, with those robust 35+% margins. It's acting as a stable, profitable cornerstone that supports this new phase of hypergrowth. And looking to the future, management is already laying the groundwork for what could become a third major growth engine. They're making a strategic entry into power solutions for AI data centers. The idea is to leverage their core expertise in power electronics to tap into another massive secular growth trend.
Now, this kind of performance doesn't happen in a vacuum. To put it in context, we need to analyze the global competitive landscape and understand Sungrow's position within this high-stakes arena.
And when you look at the global BESS integrator market, it's rapidly becoming a two-horse race. Based on 2024 data from Wood Mackenzie, Tesla held a narrow lead with 15% of the market. But look at Sungrow, right on its heels at 14%.
They've closed the gap significantly, and for all intents and purposes, it's now a neck-and-neck competition for global leadership.
What's fascinating, though, is that these two leaders are attacking the market from very different angles. Sungrow's core competency is its dominance in hardware, in manufacturing excellence, and in deep supply chain integration. Tesla, on the other hand, leads with its software platform, like AutoBidder, its broader ecosystem integration, and, of course, its powerful brand.
And Sungrow's hardware advantage isn't accidental, it's structural, and it's rooted in the realities of the global supply chain. You have to remember, China accounts for over 75% of global lithium-ion battery production. For LFP chemistry, which is critical for grid storage, that share is over 98%. This provides Chinese firms, including Sungrow, with a structural advantage in both cost and scale that's incredibly difficult for international competitors to overcome.
Of course, a comprehensive analysis requires a clear-eyed look at the risks. So, to maintain a balanced perspective, we must acknowledge the potential headwinds that could impact this trajectory.
There are several key risks on the horizon. First, you have geopolitical tensions and the potential for new trade barriers. Second, as the market matures, we're seeing intensifying price competition. Third is policy risk, as government subsidies and regulations can shift unpredictably. And finally, with a large global footprint, there's always exposure to foreign exchange volatility.
And to put a number on that geopolitical exposure, in the first half of 2025, over 58% of Sungrow's total revenue was generated outside of its home market. This significant international footprint inherently makes the business sensitive to shifts in global trade dynamics and foreign policy.
This brings us to the final, critical question. Sungrow has unequivocally proven its mastery of hardware and manufacturing scale. The strategic challenge now is whether it can build a world-class software and services ecosystem to match its physical product prowess. Answering that question will be the key to determining whether it can become the undisputed global leader in energy technology.